looks like we could be in for a day of respite. US markets last night, they've staged a smart intraday recovery. Bond yields are no longer looking scary. Gold prices have stabilized, and European markets also for the first time have shown signs of a comeback. What's important here is not the absolute change. What is important here is that how much Indian markets really have recovered from the lows, and what kind of positioning do we have in terms of the major trigger going forward. So one really looks at the market setup. I think I won't use the word magical, but yeah, DAX was up 6%. There was a big uptick which was there in Nasdaq, about 5.5%, and S&P also appreciated by nearly 5% from the lows. What is interesting here is that the selling, in a sense, which was very one-sided and which really broke the back of the market on Thursday and Friday, I'm talking about US markets, there was evidence of buying. Now what it means for India? Well, have we bottomed out? So let's try and set the tone for it, that have we really bottomed out? How can we establish that? When I say bottomed out, do we have a trading bottom in place? So what did we see yesterday? Well, for me, what matters is that Indian markets held out. We did not close at the lowest point of the day. There was a marked recovery in small cap index and even in the Nifty of about 500 points. But more importantly, as we walk into trade this morning, SGX is up about 300 points. So out of the 3% what we lost yesterday, looks like we are on course, and there you go, that's the implied volatility for you. So 400 points is what XGS has already gained. Where was Nifty yesterday? Well, the cut was almost 2%, 3% actually to be precise. There you go, 3%. And we can easily crawl back half of what actually Indian markets in a sense have registered. In terms of news flow, well, China's down. No news has come on the tariff front. Sometimes no news has, it could be called as, good news. My limited point here is that in 2000, we've seen this kind of a sell-off twice in this decade, in this century. First 2008 and then 2020. Both were very different factors. One was not because of financial reasons, it was disease, it was nature. And 2008 was a completely different kettle of fish because it was a proper shutdown of the system. In this case, while a new normal has been put to place, it's a fall where we know that in the near term there would be challenges, there would be uncertainty, but decline or peak of America surely will act as a trigger for new trade blocks to get created, new alliance to be formed, and in the near term it will come at the cost of growth, but in the medium term I think that things would stabilize, given that the attempt here is really to change the orientation of the trade and the consumer in the world. Adrian Mowat joined.
If you like this video, then like, share and subscribe to ET Now.